All right, so I'm going to talk about STAAR Surgical, which is a company that's valued at about 3.2 billion US dollars on NASDAQ. STAAR derives 53% of its global revenue from a single distributor in China called Lansheng. That's in Q2. Last year it was 43%. We think that STAAR's China sales are overstated by at least a third. And if that's true, then none of the profit actually exists because, as you know, fake sales come at 100% margins. And that would mean that about $21.6 million in overstated Chinese sales in 2019 would represent 152% of profit. So what is STAAR Surgical? It makes implantable contact lenses, which you implant surgically to correct myopia. It's a niche product that competes with LASIK, but it's much more expensive. Insurance doesn't cover either procedure, and STAAR has lost money in the last 13 of 17 years. So ex-China, STAAR sales have been growing in a really humdrum fashion. So it's a CAGR of 5% annually for the last decade, but in China, it's 37% for the last decade. And that has been driving the share price growth. So, so as China rises, so does the share price. And you can see some of the key events here. The first one was when the company signed Lansheng as its Chinese distributor. And the second one was its biggest account, IRI Hospitals, which is a Shenzhen-listed company, which got its own separate account on STAAR's Swiss site at the end of 2017. And right after that, China's sales rocketed by 91%, and that's driven up the share price. So who is this Chinese distributor, Lansheng? Lansheng is the privatized portion of a Shanghai state-owned enterprise. The company formed a new company, the company owner formed a new company right after signing with STAAR that he called by the same name in English, although its Chinese name is written differently. And he moved the STAAR business to this new company, which has a BVI parent, which, as you know, has opaque ownership. The owner is shareholder or director of about 26 different companies that distribute medical products or operate clinics. And the sub-distributors to Lansheng also operate clinics and hospitals. So these are pictures of Lansheng number 1 and Lansheng number 2. Number 1, the one that broke off from the SOE in 2008, is on Shanghai's Chongming Island, is pretty empty. And number 2, which Zhangjian started in, I think, 2014, has an office in downtown Shanghai. So why do we think that STAAR is not making the sales that it claims? So we have 4 pieces of evidence. One of them is that the largest customer, Aier Hospital Group, seems to buy less than distributors claim. So Aier is listed in Shenzhen, and you can see its financial statements. We also know from our interviews how much Aier pays STAAR per lens. So, and we know how much they charge for their refractive surgery. So if you do the math, you come to somewhere around 41,000 lenses in 2019, when it should have been 70 to 75,000 lenses. Number 2, Lansheng uses 8 tier 2 distributors, and we spoke with them all and asked them how many lenses they sold in 2019, and the numbers simply didn't add up. So here I present a chart with their responses on these. So ex-Aier, the number of lenses that they said were sold were somewhere around 29,050 lenses. 2 of those tier 2 distributors seem to be empty shells. So on the left is a company called Shanghai Leyue, which is owned by former STAAR China staff and seems to still have a strong connection to them. They were super hostile. We called, they said, you have to send information by mail about your company. We said, what's your address? They said, that's secret. We asked to speak with a salesperson. They hung up. So we don't think that they actually conduct sales activities. Above, you see a picture of Shanghai Qinghong, which is a company that's owned by the chairman of Lansheng, and similarly, that doesn't seem to have activity. Its phone number and email address are the same as Lansheng. So third piece of data, all of the lenses for the Chinese market are shipped out of Switzerland, out of the Nidau, Switzerland location. But Swiss trade data and activity don't seem to compute with the sales. So we looked up Swiss export records for 2019, and they fell well short in the category for implantable contact lenses of the amount that should have been sold in China. We went to Switzerland. We sent someone to Switzerland to check to see whether the activity synced up with the sales, and in fact we found that it seemed too quiet, and that the facility in Nidau doesn't have the increases in staff or square footage that it should if it's going to in order to justify the increase in sales volume. Finally, the STAAR's accounts are hard to reconcile with the story of a rapidly growing manufacturer. So inventories have actually declined over 5 years, despite the 95% increase in income, which would mean a much higher volume sales since the price of the lenses has declined. Work in processes declined, raw materials, and that's strange because it takes 6 to 8 weeks to produce a contact lens, one of these ICLs for STAAR, because there's a lengthy baking process. So when you increase the production, you really should see more works in process. Cash taxes are really flat, even though profit nearly tripled in the last year. And also there's no growth in VAT receivables. So in half one, Asia and especially China rescued the results. Sales in China did decline by 2.7%, but China went from 43% to 53% of total company sales, and ICL volumes were up by 7%. But that conflicts with our interview data. So Lansheng and the tier 2 distributors and clinics that we interviewed all said that volumes had declined in the first half by somewhere on the order of 30 to 50%. So July was a very good month, but and it's the seasonal high, and many clinics reported very high volumes, but we really doubt that the company can make up the losses from the first half. So let's say that STAAR is exaggerating its income and its profit. So where would be the counterbalancing? Where would it be deducting elsewhere from its budget? So we think one is the marketing budget. So STAAR booked about $45.5 million in marketing last year, in marketing expenses. And we think that this is mostly used to inflate the nominal price of a lens. This is something that we got from former executives at STAAR, who say that a big chunk of the budget is dedicated to so-called price subsidies for the lenses. So if, for example, a lens actually sells for $300, then STAAR might book, say, $450 and make a parallel $150 deduction from the marketing budget. And we can't find anything approaching $45.5 million in the rest of the marketing spend. So local distributors pay for the advertising. STAAR may pay honoraria for conferences and training, but we couldn't find more than about $500,000 annually in those expenses. We looked at the financial statements for STAAR China. And we found well less than $200,000 spent on sales and marketing in 2019, even though China is 43% of the total market. So second item that we're skeptical of is the R&D budget. So STAAR booked $25 million in R&D expenses last year, but the interviewees say that R&D is all internal. The company has around 20 staff in R&D. There have been some quality remediation costs to deal with complaints by the FDA against the company, but those should have ended mid-2018. And the rest of it would be clinical trials, but STAAR has very few clinical trials. The biggest one started this year, and previously, this is the total number of trials we could find, 9 trials since 2008. And fairly small scale. I highlighted in red one that was conducted in Iran just because I think it's weird. I looked up all the other trials conducted in Iran and couldn't find another US company involved, but I will just leave that there. So there's also a strange cash management pattern. We would be very hesitant to accuse any company of misrepresenting its cash balance, but it does raise some questions. So STAAR's Q2 report showed sharply declining interest on its cash balance. The interest has always been quite low, the net interest. It's a net number, but there's very little debt. And also the company has issued and revised a shelf registration, which is weird because it's sitting on a huge chunk of cash from its 2018 secondary, like 5 times as much cash as it's ever had historically. So STAAR has had several deficiency letters from the FDA. This occurred a number of times between 2005 and 2014. New management, which came in at the end of 2015, beginning of 2016, succeeded in remediating the deficiencies, but the pattern of hiding data is very concerning. And we question why the company waited until this year to approve what's supposedly its killer product, the EVO lens with a little hole at the back for drainage in the United States, and only started trials this year, even though the FDA problems were cleared in 2018 and the company raised a bunch of money. STAAR has paid out $10.7 million to settle separate class action lawsuits. I think what's interesting about those lawsuits, they occurred a decade apart, and yet they had almost exactly the same allegations that STAAR was hiding data from investors. So I think I will stop there and see whether anybody has questions.
Thanks, Anne. No questions that I can see as of yet. I do know that it looks like both of the stocks that were mentioned so far today are already moving here at the open. It looks like they're down a couple %. So thank you for that. It does look like the question here is, what led to the increase in June?
The increase in sales in June?
I believe that's correct, yeah.
Well, that's a good question. I mean, presumably part of it was because clinics reopened. In China, you had a total close down for 7 weeks.
Sorry, I'm sorry. I meant the increase in the share price.
Oh, in the share price in June. Yeah. I don't know what led to, I'm not sure what led to the increase in June share price.
Yeah,
not
could
sure.
have been Davy Day Trader. No, I'm kidding. Right. Yeah. Who knows? Who knows? And also, what is your target price if you have one? Is this going to zero, you think, or?
You know, we don't have a target price because I think that this company, you know, if you think a company is just not presenting results honestly, then there's no way really to know where the share price should settle. It's only companies that are honest and direct but overvalued where you can set a share price. So no, we haven't set one.
Okay, cool. Great. Thank you so much, Anne.